sometimes the questions are more like speeches, and or they're not really questions, or they're not quite the right question. And so I try to find the good question and give the good answer to that question. Also, respect. We in our system of government, they are our oversight, and our democratic legitimacy runs right through transparency and right through their actions of holding us accountable and being explaining to them what we're doing and why. So we answer any and all questions that they may have, and so I work hard to get ready for those with a lot of help from people, and we take them very seriously.
Banking regulations. New regulations are in the works. Banks are not happy about it from Wall Street down to community bankers that I talk to. What's your confidence level first of all, about the banking system right now, and then about the need for more regulation? Can you fix what you think is wrong?
Sure. So I would say the banking system is in a good place now. A little over a year ago, we had a period of stress. I think things have settled down significantly. I think banks are lending. I think we focused a lot of attention during that period and since on banks that had things like CRE, commercial real estate losses, or perhaps funding structures that needed to be supported more. And we work with a ton of banks to address those issues. And so I think the banking system is definitely in a good place. I think the commercial real estate problem will be with us for some years, but it is just a question that some banks, and it's mostly small banks, it's definitely not the very large banks, have concentrations of commercial real estate, and it looks like they will be realizing losses over time. And we're working with them to make sure they have enough capital, that they do understand the losses, and so that they can work through this. And so that's what we're doing. And again, that process will play out, and I think that'll be okay.
I talk to a community banker every now and then up in Seattle, and she basically, I think I don't want to put words in her mouth, but I will. I don't think she would characterize it as working with. I think she would characterize it as the Fed's telling us what to do. And I guess I wonder what your response is to that.
Well, supervisors, we have a job, which is to make sure that banks understand and can manage their risks. And, it can be either of those things. It can sometimes, certainly supervisors have to at some point say, you got to do this. And that's one of the lessons of the Silicon Valley Bank situation was a need to be forceful when it's appropriate.
Sorry, let me dig in on that just a little bit. Forceful is one thing. Well, let me phrase it a different way. Do you need to convince the banks that you're working with them, or can you just say, you got to do it, sorry?
I think I've never worked as a bank supervisor, but what I believe is this: bank supervision can tend to be pretty process oriented, and there's a playbook, there's a checklist. And that's a good thing, because you want the banks, it wants to be transparent so that they know what's expected, so they can do what's expected. But it can also be slow when it needs to be fast. And so the art of it, and there's definitely an element of art in this thing. And some people are just very, very good at it, and others less so, but you can see. The art of it, though, is for the banks to understand, generally banks, banking is different from many other industries. It is a heavily regulated and supervised industry, and they, particularly the larger institutions, they have ongoing daily interactions with their regulators and supervisors. What's important is that the banks are well capitalized, that they understand their risks and they can manage them, that they have adequate liquidity, that if they have good resolution plans. And our job is to make sure that that's the case. The more the banks take that on themselves and do a great job at it without us pushing them, the less we need to push.
The international situation. The United States is doing better than every developed economy, I believe, in the world by a good measure. What do you make of that, and how does it affect your decision making?
So I do a fair amount of my job is going to these international meetings, either in Basel or whoever's running the G7 or the G20 in a given year. And that is what people are talking about, is the sort of exceptionalism right now of the U.S. economy, how strong the U.S. economy is, and there's no question that we are performing very well. I think part of it just is I mean, productivity is a key thing. The Europeans are very focused right now on not just their short-term low productivity, but what can they do to have greater productivity growth over time? This is a big focus for the European economic officials at the highest level. Mario Draghi is doing a report on it, and the finance ministers that I talk to in the big countries, this is their focus. And so it's tremendously important. And so people are thinking about what can we do. Some of the things they're looking at doing sound like the United States, like having a flexible labor market and having a very active financial sector that can fund early stage or small companies well. So it's very important. And so yeah, the U.S. is doing the performance of the U.S. economy in the last year or so has been quite strong.
Does that affect how you do your job?
Yes, it does.
Discuss.
Well, seriously?
Sure, please.
Oh man.
I know. It goes fast when you're having a good time.
My job is to hit a signpost, and I can't even do that.
Well, apparently not,
Sure.
no. But I'm your helper. I am on stage, ready to help you.
Sorry, Mary.
Chair Powell, I'll turn it back to you.
As I mentioned earlier, the fact that the U.S. economy is growing at such a solid pace, the fact that the labor market is, still very, very strong, gives us the chance to just be a little more confident about inflation coming down before we take the important step of cutting rates. And so we're not going to take that step until we are confident, or we don't think it'll be appropriate to do so, I should say. But that's the way it plays into what we're doing.
How about you, boss?
Okay, thank you very much, gentlemen. It was a terrific conversation. I appreciate it. Thanks.
And you have been listening to a conversation with the chairman of the Federal Reserve, Jerome Powell, speaking with Marketplace host Ty Rizdal at the Macroeconomics and Monetary Policy Conference hosted by the Federal Reserve Bank of San Francisco and that bank's president, Mary Daly. Very interesting discussion with Chairman Powell there, talking particularly about the economic data that we got today, saying that the core PCE was pretty much in line with expectations and reiterating the message that we have heard for months from this Federal Reserve. A direct quote from Chairman Powell at the event: "We don't need to be in a hurry to cut." So once again, reiterating that message that the Fed can remain patient in the midst of this bumpy road that we are seeing in disinflation. And for more analysis, we are joined once again by Bloomberg's international economics and policy correspondent, Michael McKee. Mike, thanks again for being with us. So slow and steady wins the inflation race. Is that the message you heard from Chairman Powell at this discussion?
That's what you got. He didn't say anything new, but he reiterated the position that the Fed has taken for quite some time, that they need to see continued towards a 2% inflation goal. And he finished up just a moment ago by saying we're not going to take that step of cutting rates until we are confident that we are headed there. That's been the message from the Fed for quite some time. He said that I thought one of the most fun questions that Ty Rizdal asked was, what's wrong with saying you just don't know what's going on, and how are people supposed to take it if you say the same thing all over again? And he said basically that we are trying to be humble, and we're trying to be humble about our ability to see the future, and we want to be thoughtful, careful, and steady hands in making monetary policy. So they don't want to rattle the markets, and that's going to be the message until they do see the progress they want. He was asked about, obviously, today's PCE numbers and said they're in line with kind of what they expected, but it's still a bumpy progress, and they weren't good enough to, lead the Fed to cut rates right now.
And maybe this is part of the answer, this idea that the Fed has to be humble and not say that they know what they don't know about the economy, but how much more data do they need? We've seen months and months of data that have, over the last couple of months have come in a little bit bumpier than they have in months prior. But when the Fed says that they need more data, it does raise a question of how much more data they need before they can make that decision to pivot, doesn't it?
Yes, that's the big question on Wall Street, is when do they make that pivot? When do they start suggesting they're going to be cutting in the near future? Powell did not discuss that today, did not put a time frame on it, but on Wednesday night, the the Fed Governor Chris Waller said he's going to need several more months of data to tell him that they're going in the right direction, which would seem to suggest May is off the table because they'll only get one more month's worth of data. The question then is, with 2 months, can they do it in June or do they look to July? Those are going to be the kind of things that are going to have traders on edge as the inflation data comes out over the next couple of months.
So we do have that possibility still that we will get a cut perhaps in the second quarter, maybe into the third. Let's bring in Sarah House for some more analysis. She's back with us as well. Sarah's the senior economist at Wells Fargo. Sarah, good to have you back with us after we've gotten this data on the core PCE just this morning. We've heard the comments in this moderated discussion from Chairman Powell. What's your view on where the Fed goes with rates at this point?
Yeah, I think ultimately we heard that right now Chair Powell doesn't feel like they need to be in a hurry with cutting rates. It is a big decision, as he espoused multiple times throughout the conversation. But what we heard time and again was that he views the economy as strong right now, and particularly the labor market being in a good place, which does seem to afford them some time to see if inflation can come down a bit further in the months ahead.
And to that point, Powell said that the Fed can hold rates steady if inflation doesn't come down. It seems to take at least a little bit off the table the idea that we'd see a rate increase at any point. But is the Fed trying to give the market a message that maybe rates are going to stay elevated for even longer than they might have priced in at this point, that the market needs to kind of get ready for a new normal in terms of where rates go?
I think right now it's more just about they need to see more. That it's, I don't think they're unhappy with where markets are priced for cuts right now. And if you look at what the work function on the terminal and the most recent SEP, they're in pretty close alignment. You know, somewhere close to 3 cuts when you round roughly the median there. So I don't think that this is about really trying to guide the markets in a major way, but it's more about the fact that the data has come in still pretty strong, and all else equal, that does point to reducing the level of restrictiveness a little bit later.
And just to bring it back to the data that we saw this morning, is there anything that's in the core PCE that indicates to you that we could see even more bumps along the way?
Well, I think just given the degree of the slowdown we saw in services, while welcome, I wouldn't expect that to necessarily repeat month in, month out over the next few months. And at the same time, I think some of the goods inflation that we saw, some of that might have been helped by, might have been gotten a little boost from seasonal. So I think we're still likely to see some bumps here over the next few months.
One of the questions, Sarah, this might be key, that got some attention on X and other social media platforms was when Kai Rizal asked him, does the Fed get too much attention? Do people pay too much attention? And he said, I think they do pay too much attention to Fed monetary policy because policies that raise productivity and living standards are far more important over the longer term. Do you agree that maybe the media and the markets put too much attention on every word Fed officials say?
I think there is certainly quite a bit of focus, and sometimes miss other aspects that do move the needle quite a bit on economic growth. So areas like fiscal policy, as well as I think some of the other policies that do support labor supply, overall supply side things that can boost that productivity as well. So in some ways, it's Tom King's parlor game in terms of what the Fed's going to do, what the Fed's going to do next. That does get so much attention, but I think Chair Powell's right in that there are so many other things that need to be considered when we're thinking about what's GDP growth going to be a year from now, 2 years from now, that can play into.
Speaking with Sarah House, senior economist at Wells Fargo, along with Bloomberg International Economics and Policy correspondent Michael McKee, getting some reaction to what we've heard in just the last few minutes from Fed Chair Jerome Powell at the Macroeconomics and Monetary Policy Conference at the Fed Bank in San Francisco. The chairman, Sarah, does put a lot of emphasis on transparency, not rattling the markets with the with the words that we hear from the Federal Reserve in the context of the economic data that even we've gotten just today. Do you think that the Fed is transparent enough? Does it say too much to the markets?
So I think they are certainly very transparent. I think sometimes that's still maybe not even good enough for markets in terms of what exactly, are the specific data points they're looking at when I think like a lot of us in thinking about the economy, they're taking a lot of different data points into consideration. And I think at times too, given the degree of transparency, it can be difficult to parse through all the different points of views and where that might lead to in terms of a consensus. But I think it certainly beats the alternative where we didn't know what the Fed was thinking in years past.
It was interesting as well to hear Chairman Powell bring up politicization of the Federal Reserve as we get closer to an election year, even more into the election cycle, and this idea that the Fed could become more politicized as we get closer to that election time. Do you think that, notwithstanding what Chairman Powell had to say about how the Fed can't be politicized, that it would go against the Fed's own mandate to bring politics into its decision making? Having said that, does the timing of the election cycle play at all into rate decisions from your perspective?
So I think it can make the timing of when they're maybe pivoting on policy a little bit trickier, if nothing else, just because they want to avoid that look of politicization. And so what we did hear from Powell today is he said that these decisions, though, are not on a political calendar. And I think just given that it still isn't an easy decision for when they may cut rates this year, if they do at all, just based on the risks to both sides of the mandates, that perhaps the best thing is just to not worry about it at all and just look through, put their heads down and make the best decision they think for the U.S. economy.
Really appreciate this, Sarah. Thanks again for coming on with us to analyze Chairman Powell's comments, and of course coming on earlier as well when we got that core PCE data on this Good Friday. Sarah House with us there, senior economist at Wells Fargo, and Bloomberg's Mike McKee is still on with us for the next few minutes while we sort of dive in a little bit more into what Chairman Powell had to say in this moderated discussion. It did seem, Mike, as though, this idea that the Fed doesn't want to rattle markets, even on a day when, we've all got the day off from trading, that really does seem to be a lot of what drives Chairman Powell in terms of what he has to say, that he really doesn't want to surprise markets.
If he can get out of a public appearance without markets moving, he considers that a victory. But this is what the Fed's policy has become.